Hello everyone, I am presenting on the topic Company Audit, its provisions, Audit Program and recent changes. Let's dive in. Contents: Company Audit, its overview, legal provisions under the Companies Act 2013, penalties for non-compliance, Audit Program, key steps and recent changes. Company Audit. Company Audit is independent examination of financial statements of a company, which has to be conducted by a chartered accountant mandatorily. It mandates under Companies Act 2013 and it ensures transparency, accuracy and compliance. Legal provisions under Companies Act 2013. Section 139 to Section 147, which I will be covering. Section 139, appointment of auditors. Section 140, removal, resignation of auditors. Section 141, eligibility, qualification, disqualification. Section 152, remuneration of auditors. 143, powers and duties of auditors. 144, prohibited services. 145, signing of audit report. 146, auditor's duty to attend the AGM. Next is 147, punishment for contravention. Section 139, appointment of auditors. Appointment of first auditor has to be done by the board of directors within 30 days from the date of registration of the company. In case of failure, the members of the company should appoint the first auditor within 90 days in the extraordinary general meeting. Next, the subsequent auditors. Subsequent auditors has to be appointed at the first annual general meeting. He shall hold office from the conclusion of the first annual general meeting till the conclusion of the sixth annual general meeting. The notice of the appointment has to be given to the registrar in form ADT 1. Rotation of auditors, which is also covered under section 139 of the Companies Act 2013. Rotation of auditors, it's mandatory, applicable to listed companies, unlisted companies having paid up share capital of greater than 10 crores. Next, private companies having paid up share capital of greater than 50 crores and all other companies having paid up having public borrowings or deposits greater than 50 crores. Section 139 for companies, individual CA 1 term of 5 years, audit firm 2 term of 5 years with a cooling period of 5 years. Next, removal of auditors, section 140. A special notice is received for the removal of the auditor. A board meeting will be held authorizing the filing of application to the central government through board resolution. Application to be made to the central government to be made in ADT 2 within 30 days of the board resolution. Next, approval has to be received from the central government. After approval from the central government, special notice to be sent for the AGM within 60 days of receipt of approval from the central government. Auditor shall be given a reasonable opportunity of being heard. Next, passing a special resolution on removal of the auditor. Auditor will be removed. Who can be an auditor under section 141 of the Companies Act? A practicing chartered accountant can only be an auditor under Companies Act 2013. He is disqualified under if some of the clauses: officer or employee of the company, holds securities or loans in the company, has business relationship with the company, already has 20 active company audits. Remuneration of auditor, section 142. Subsequent auditor, remuneration to be fixed by the company in the annual general meeting. First auditor, remuneration fixed by the board who has appointed the first auditors. Section 143, subsection 12. Reporting of fraud. If auditor has a reason to believe there is an offence of fraud, if the amount is greater than 1 crore, then the same has to be reported to the audit committee or board within 2 days, seeking reply within 45 days. If on receipt of the reply, the same shall be forwarded to the central government with his comments within 15 days of receipt of the reply. If no reply is received, then the same shall be forwarded to the central government only with his report. The reply should be sent to the secretary MCA in a sealed covered followed by an email. The reporting format is form ADT 4. If the amount of fraud is less than ₹1 crore, the auditor shall report the same to the audit committee or board within 2 days, specifying the nature of fraud, amount involved and the parties involved. The penalties for non-compliance under section 143 subsection 12 is for listed company it's 5 lakh and for any other company it's 1 lakh. Next, we have the prohibited services under section 144 of the Act. Accounting and bookkeeping services, internal audit, design and implementation of financial information system, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services, management services, any other services as prescribed by the Act. Section 145. Auditor's duty to sign the audit report. Audit report gives opinion on the financial statements or duty of the statutory auditor to sign the audit report. Qualifications or observations on the financial statements, financial transactions which have adverse effect on the functioning of the company has to be reported in the audit report. The audit report has to be read before the general meeting and it is open to inspection by any member of the company. Next is auditor's duty to attend the AGM, section 146. The notice of the AGM has to be served to the auditor also. Auditor can attend the meeting either by himself or through his authorized representative. Auditor has a right to be heard in the meeting on the matters respecting him. Next, punishment for contravention, section 147. If the contravention is unintentional, then the minimum fine of rupees 25,000, maximum of lower of rupees 5 lakhs or 4 times the remuneration. If the punishment is knowing or intentional, 50,000 is a minimum penalty which may last up to lower of rupees 25 lakhs or 8 times the remuneration, and imprisonment for a term which may extend up to 1 year. Next, we have audit program. Audit program consists of a series of verification procedures to be applied on the financial transactions and accounts of a given entity to obtain sufficient evidence. Evolving one audit program for all the businesses is not practicable, and continuous review of the audit program once prepared has to be done. Preparation of audit program. While preparing the audit program, we have to stay within the scope of the assignment, apply only those steps which are necessary for the verification purpose, and we have to consider all the possibilities of error. Audit program key steps: planning the audit, preparing the engagement letter, understanding the business, defining the scope and the risk areas, execution, voting and verification, physical verification of inventory assets, stock verification, statutory dues verification, and internal control testing for some of the transactions. Finally, the reporting. Audit report has to be given, reporting of CARO 2020 if it's applicable, final review with the management on the observations. CARO 2020. Reporting under CARO 2020 is mandatory to all the companies, including foreign companies, except small companies, Section 8 companies, OPC, banking company, insurance companies, private limited companies whose paid-up share capital and reserves and surplus is less than rupees 1 crore, borrowings is less than rupees 1 crore, and revenue is less than rupees 10 crores. CARO 2020 contains specific clauses, which is 21 clauses in total, which includes fixed asset and inventory verification, loan defaults and frauds, CSR and statutory dues reporting, internal audit, etc. Recent changes which will be applicable to the companies under Companies Act 2013. CARO 2020 Enhanced Reporting Requirements Audit Tree, which is applicable from 1st April 2023, which mandates mandatory audit logs in the accounting software used by companies. Mandatory UDing for CA certifications, CSR reporting, enhanced disclosure in the auditor's report, NFRA rules, increased oversight. NFRA has the power to review the working papers and communication related to the audits, evaluate the manner of documentation. This is about Companies Act 2013, the provisions and audit program. Thank you.